everyone and their mom is yelling at you that there's going to be a crash. But what we've seen over the last few days is a huge bounce in tech stocks. And why is that happening? It's because this yield right here, it's coming down. One of the stocks that really likes that yield coming down is Apple. And Apple, we had the theory that this was going to come test in this zone, if not even come all the way up to the gap fill. Right now, we are seeing that play out. And if I break you down into a shorter time frame, you can see the trade that I took. This is just one of my strategies when things kind of get way out of line. As you can see, we had one bottom. I was hoping for a short squeeze, and then we have the second bottom, which gives us a very significant divergence on the MACD and even the RSI. So both of those lined up for me. The trade setup started, and I was able to make my entry somewhere around here. And I actually exited right around this area here because I thought we would see some sort of reaction off this that would pull us back down into possibly these areas to meet up with something in here. And then we would go through breaking that neckline and bringing us up into testing the gap fill area. Now, I do believe the gap fill area is where we are going to see Apple start to fade. But that does not mean that it cannot go higher in the short term. Now, back to yields, it's important to keep in mind that though the yields are coming off, Jerome Powell has told us multiple times that he is willing to continue raising rates. And that means that he hasn't hit his 2% inflation target. He's sitting at around 4%. He has to get it down to 2. So something has to happen in order for that to come down. So what we're going to see here is most likely these yields are going to come down into the bottom of its channel. We're going to keep seeing a bounce in tech stocks until something comes out that tells us otherwise. That could be tomorrow's unemployment data. That could be CPI data in 2 weeks, which is not this Wednesday, but the next Wednesday, I believe. So what I'm expecting overall is this to probably come down into this area, and then we see it rip higher. We create a nice another divergence here, and then that is when we start to see things fall. And maybe that is the first signs that we are actually in recession. So we will see, but overall in the, I guess, medium term, I see rates going higher just because Jerome Powell told us. And if this breaks above this area here, it's going to get ugly. People are going to get so scared out of it that we are going to see a drop that is probably the biggest drop we've seen in the last 2 years. I mean, we've seen some significant drops. We've seen Apple drop significantly, but this thing is going to really surprise people. So TLT, this is a trade I actually took. What I was looking for was this wedge structure. I saw a nice divergence, and I was looking for it to come up into these areas of supply, support, anything like that. So, and a retest of this range-bound structure would have been really nice. Now, we are seeing that. I even got a buy signal, but I noticed if I go into a shorter time frame, on the 30-minute, I am noticing a divergence start to play out on the MACD, and if I pull this down, the RSI. So these levels here, I actually exited my position right up in here, just because once I start to see those things, and even though it's a short-term trend, I like to do that just in case something bad is going to happen, especially before a data drop, which is happening tomorrow with unemployment numbers. So what I'm sort of expecting now is some sort of pullback, possibly just a little pullback into here, which is what I'm expecting in stocks. And then we launch that right back up, and then it comes up into here. So that'll set up a nice hourly or even 2-hour divergence for you. And let's pay attention to the indices. So the SPY is coming up, and my theory was I moved my right shoulder all the way up into here. I have a theory that it is going to touch gap resistance, then fall off a tiny bit, maybe for just a couple of days. Then we're going to rip higher into the CPI. And that could either gap fill or even go above this last high. So don't be surprised if this goes above that last high, but what you can plan on is you're going to get a perfect little divergence on a daily chart if that does happen. I don't personally think that's going to happen. I think we are going to see a touch, maybe some sort of pullback, and then go to the gap fill area, and then we're going to see this thing start to rip to the downside. So overall, my theory is that this is going to build up into the CPI. The CPI comes in hot, and then that is what causes so much turmoil in September. Let's switch over to the Qs, see if there's anything different. The Qs here, it's roughly the same-ish as the SPY. It looks a little stronger in my opinion, just because it really got that spring-loaded bounce. Um, but what we're seeing here is pretty much just an ABC pattern play out. And I said a couple days ago that I wanted to see a retest of this broken trend line that goes all the way back to like January. So I would like to see a retest of this, maybe a fall off, and then another retest, and then we start to come down, which would, in fact, line up with that CPI data. I trade like water, so water going down a stream. It's whatever rocks are thrown in, you got to move around them. So if tomorrow's data comes out and it is bad, and the market sees it as bad, then I will flip my position. But right now, I do see stocks heading slightly higher, maybe after a short pullback. When we get that pullback, could be today, could be tomorrow, it could be next week, and then we bounce higher into the CPI because people are saying right now that there is going to be no rate hike. And I think they are going to be not so pleasantly surprised. The other thing that's crazy is volatility has not re-entered this market, so you have to be careful with those quick trades on the shorter time frames because we're not seeing the volatility like we normally do, and it's actually starting to subside. And what's happening here, I don't think I touched on this at all, but we did break out of this wedge. We got a nice base here. We broke out. We had maybe a little A, B, C pattern for this. And now it's falling back off. It's crossing on the MACD and all that. So what I'm kind of expecting, and maybe the most obvious thing, is a retest of somewhere down in here, which would be crazy to see a VIX reading of 10. That would be insane. So my less insane thought is that we are just going to come in and test these lows, and then we are going to then bounce off it like a trampoline. I genuinely think that once this thing is done retesting wherever the fuck it wants to retest, it is going to rip off of this really, really fast. And people are going to get stuck in a trap at those tops. So pay attention to that. Just keep looking at what the stocks are doing before big data drops. If they are coiling up, be ready for that move. Maybe stay out of it for the first hour and see what the market does, and then make your decision. Really, really need to look at these because people are not banking on a rate hike, which means that exact thing is what will surprise people the most. And I think that CPI data in the middle of September, I think it's 2 Wednesdays from now, I think that is possibly your catalyst that will really shake the market up. That, or maybe a black swan moment, because this is nuts. Michael Burry is betting $1.6 billion against the market. So just keep your head out of the clouds. All right. Don't get FOMO or anything like that. Wait for your trade setup to happen. Look for those right levels and get into it. So my biggest tip is be like water. Look at what's happening in front of you and move around those big rocks. Look for those certain things, certain pieces of data that are coming out, and look at what the charts are telling you before the data comes out. But maybe don't take the trade. Wait for the first hour to play out, see the direction that the market is telling you, and then go from there. Make your trade based off of that. I truly believe that CPI in a couple of weeks, on 2 Wednesdays from now, is going to shake the market. Everyone is banking on interest rates going down or at least being paused. And I think that we are going to see some data come out that is going, I mean, look at the products around you. Are things still expensive? The answer is yes. The housing market's expensive. Everything is expensive. So they're going to have to raise rates again at least 1, if not 2 more times by the end of the year. So keep that in mind. This bounce will fade, and you just need to stay on your toes and look for the opportunity to take a trade while it's happening, okay? I am fairly new to making these types of videos. I really appreciate any kind of feedback that you guys might have, anything that you guys would like me to break down, maybe a random stock, anything like that. But I feel if I, maybe interested or helped someone, even one person, learn, then I did my job and I did exactly what I'm trying to do here. So I really appreciate you guys. Give me a like and subscribe if you found anything helpful, and I'm out. Peace.